By the end of this video, you'll understand how do I find high points of interest in the market, how do I trade them, and how do I make money out of them. Guys, first of all, I want to keep it very simple. Don't overcomplicate this. Do you think I have 10 trend lines all over the chart trying to figure out where the price is going to go next? I don't. So the absolute best way is to look for the daily chart. So just by looking at this candle, is it more likely to take out the previous day high or the previous day low? For you to think that it's going to go for the previous day low, think about it this way. It has to move all the way to the downside in an entire day, right? We don't have that much movement in one day. There's only so many pips that we move on average within a single day. The chances that it's going to go all the way lower just for the previous day low are very slim. So obviously we're trying to trade it to the upside. It's more likely to trade into the high of the previous candle and not to the low. So let's forward. So now you might say, well, but it went down, right? We took out the previous day high, but we were bearish for the entire day. I chose this example specifically because, guys, you don't even have to be right in the bias for the entire day to make money. Because this move alone is already enough for a trade. It's already enough to get you a couple of pips a day and you're out of the market, guys. That's it. That is basically trading. So same thing for the downside. Is it more likely to take out the previous day low or the previous day high? Just by looking at this, why would it go all the way up again after having such strong momentum to go up again? The only fair, valid point would be that we have an FVG up there, but that's not valid enough. You have to look at the context, right? We have too much momentum to the downside to go up again. So obviously it's going to go for the previous day low. Let's go forward. That's what happened. So the next thing are relative equal highs and relative equal lows. They are personally my favorite way to trade, and I combine them with FVGs and what I've just told you with previous day high and previous day low. When you see this, you see a bunch of highs being relatively equal high to each other, right? That's where the name comes from. So many people see this as resistance. We're going to go lower. It's like a wall, but it's not. There's a bunch of stop losses up here and we're going to go up there because we want to take out those stop losses. Guys, it's very simple. You don't have to overcomplicate it with some patterns or some whatever it is, right? Keep it very simple. So we have, for information one, we have relative equal highs. The second information, what do we see on the chart? We see an FVG lining up with the relative equal highs. I call this a magnet, a strong magnet to the market. The market is attracted to things like that, where there's a bunch of liquidity just residing, waiting to be taken out. So what is going to happen? We're going to go to the upside. It's just a too strong of a magnet for it to go lower again. Don't overcomplicate it. Keep it very simple. My trading is extremely simple. I don't overcomplicate things. I trade for the day. I set my stop loss. I set my TP, my entry, my limit order, right? And then I forget about it. Then by the evening, I check the trade again. If it's a loss, it is what it is. If it's a win, it is what it is. That's what trading is about. Don't overcomplicate it. The only way that trading can be complicated is if you're making it complicated. So guys, trade safe and see you guys next video.